You want to perform at your best. Not once, not on a lucky day, not when the market happens to move in your favor. You want to reach that quiet state where your decisions feel clean, where fear does not rush you and hope does not trap you, where you execute with clarity and walk away without emotional scars. But somewhere along the way, you were taught a silent lie. You were taught that peak performance in trading means being right most of the time, and that belief has been quietly exhausting you ever since. You open a chart, and what are you really looking for? Certainty. You want proof. You want confirmation. You want something that tells you this one will work. Because deep down, you believe that if you just study enough, if you just find the right method, if you just think hard enough, you can eliminate uncertainty. But the market does not operate on certainty. It operates on probability. And that difference changes everything. Every single trade you take is part of a larger distribution of outcomes. Some will win, some will lose. The order is random, the sequence is unpredictable. The next trade has no obligation to reward you just because the last one did, or punish you just because the last one didn't. Yet you felt it. After 3 losses in a row, your chest tightens. You hesitate. You start thinking maybe something is wrong. Maybe you've lost your edge. Maybe the market has changed. After 3 wins in a row, you feel something else. A surge. Confidence turns into subtle invincibility. You increase size. You relax your rules. You begin to expect. And expectation is where performance begins to crack. Because the moment you expect a particular outcome from a single trade, you stop thinking in probabilities. You stop operating from your edge. You start operating from emotion. Peak performance is not about predicting correctly. It is about thinking correctly. And thinking correctly means accepting, fully and without resistance, that you do not know what will happen next. That statement sounds simple, but if you sit with it, it unsettles you. You don't know what will happen next. Not on this trade, not on the next one, not on the one after that. The only thing you can know is that if you consistently apply a proven edge over time, the probabilities will play out in your favor. But your mind doesn't like over time. Your mind wants now. Your mind wants immediate validation. Your mind wants to feel safe. And that's where the real battle is. Most average traders are not lacking intelligence. They are not lacking access to information. They are not lacking tools. They are lacking psychological alignment with the true nature of the market. They believe peak performance comes from mastering the chart. But peak performance comes from mastering the self. You've felt that inner conflict. You plan your trade calmly. You know your risk. You know your exit. You enter with clarity. Then price moves slightly against you. Not dramatically, just enough. And suddenly, your mind begins talking. What if this one is different? What if this is the start of a big move against me? Maybe I should close early. Or price moves in your favor. And another voice appears. Take it now. Don't let it turn around. Lock it in. Be safe. Notice what is happening. Your brain is not responding to probabilities. It is responding to discomfort. And until you understand that discomfort is part of the game, you will keep trying to eliminate it. But peak performance does not eliminate discomfort. It operates cleanly in the presence of it. The average trader tries to remove uncertainty. The peak performer accepts uncertainty. That acceptance is not passive, it is powerful. When you truly accept that any individual trade can lose, you stop fighting reality. You stop personalizing outcomes. You stop interpreting a loss as a statement about your worth or your intelligence. It simply becomes one event in a series. Think about that. If you flip a coin that has a slight statistical advantage over many flips, any single flip means nothing. Heads or tails does not change the underlying probability. But if you emotionally attach to each flip, you will sabotage yourself before the edge ever has a chance to work. This is what most traders do. They demand emotional certainty from a probabilistic environment. And the result is anxiety, impulsive decisions, hesitation, revenge trades, and inconsistency. Once that illusion of certainty begins to dissolve, something inside you softens. You stop trying to be right. You start trying to be consistent. And that shift is the beginning of real performance. Because once you stop chasing the need to be right, you start seeing your own mental traps more clearly. Fear of uncertainty is the first one. You feel it before you click. That slight resistance. that hesitation. You want one more confirmation, one more sign, one more reason. But what you're really asking for is emotional comfort. Then there is greed. It shows up quietly. It tells you to hold longer than your plan. It whispers that this could be the big one. It convinces you that rules are flexible when the opportunity looks special. Overconfidence follows wins. Denial follows losses. Attachment to outcomes creeps in slowly. You start measuring your self-worth by daily profit and loss. A red day feels like personal failure. A green day feels like identity validation. And without realizing it, your emotional state becomes hostage to short-term results. Peak performance cannot survive in that environment, because when your emotional stability depends on outcomes you cannot control, your decisions will always be distorted. You must learn to observe these distortions in real time, not judge them, not suppress them, just observe. When fear appears, notice it. When greed rises, notice it. When the urge to move a stop appears, notice it. This simple awareness creates space between impulse and action. And in that space, discipline lives. The average trader reacts. The peak performer responds. Reaction is fast and emotional. Response is calm and aligned with plan. But you cannot respond calmly unless you have something clear to align with. That is why written rules are not optional. They are psychological anchors. When your rules exist only in your head, they are flexible. They bend under emotional pressure. They adjust to fit the moment. When they are written clearly, they become commitments. Not to the market, to yourself. You define what qualifies as an opportunity. You define how much you risk. You define where you exit if wrong. You define where you take profit, and then you follow it. Not because it guarantees a win, but because it guarantees consistency. And consistency is the only path to statistical advantage. You also need to understand your why, not the surface answer like to make money. Go deeper. Why does this matter to you? Freedom, stability, growth, self-mastery. When your motivation is shallow, discipline fades quickly. When your motivation is rooted in personal growth and integrity, discipline strengthens. Peak performance is not fueled by excitement. It is fueled by alignment. You align your actions with your edge. You align your risk with your tolerance. You align your expectations with reality. And slowly, you begin to experience something different. You enter a trade without tension. You accept the risk fully before clicking. That means if the stop is hit, there is no shock, no anger, no internal argument. You already accepted that possibility. That is what it means to truly own the risk. Most traders say they accept risk, but they don't. They hope. Hope is not acceptance. Acceptance feels calm. Hope feels desperate. When you truly accept risk, you size positions appropriately. You risk small enough that no single trade can damage your emotional equilibrium. You understand that capital is not there to prove anything. It is there to express probability over time. That perspective changes how you treat losses. Losses stop feeling like threats. They become business expenses. Normal. Expected. Neutral. And when you stop fearing losses, you stop avoiding valid trades. You stop cutting winners short out of anxiety. You stop doubling down out of frustration. You operate within your plan, but even with a plan, you will make mistakes. You will break rules. You will hesitate. You will occasionally act emotionally. The difference now is how you interpret those moments. Instead of shame, you choose curiosity. Instead of self-criticism, you choose review. You ask simple questions. Did I follow my rules? If yes, the outcome does not matter. If no, what was I feeling in that moment? What thought drove the deviation? This process transforms errors into teachers. You begin to separate random variance from actual mistakes. A losing trade that followed your rules is not failure. A winning trade that broke your rules is not success. That distinction is powerful because peak performance is process-based, not outcome-based. And once you internalize that, drawdowns lose their emotional intensity. They become part of the distribution. You understand that even with an edge, there will be periods of losses. Not because you are broken, not because the market is against you, but because probability includes clusters. If you can maintain discipline through those periods, your confidence shifts from outcome confidence to process confidence. And process confidence is stable. It does not fluctuate wildly with daily results. Over time, something subtle happens. You stop checking your account constantly. You stop obsessing over every tick. You stop needing immediate feedback. You execute. You review. You rest. Mental energy is preserved. And that preservation is critical. Because peak performance is not about intensity. It is about sustainability. You cannot operate in a heightened emotional state forever. You will burn out. But when you accept randomness, align with probability, define risk clearly, and review without judgment, you create a system that supports longevity. You become less reactive, more patient, more neutral. You no longer feel the need to prove yourself to the market. You no longer feel attacked by losses. You no longer feel euphoric over wins. You begin to feel steady. That steadiness is the zone, not excitement, not adrenaline. Steadiness. You trust your edge. You trust your process. You trust that over time, consistent execution produces results. And when setbacks happen, you adjust calmly. You reduce size if necessary. You review data. You refine rules. But you do not spiral. Because your identity is no longer tied to short-term outcomes. It is tied to disciplined behavior. Average traders chase emotional highs. Peak performers cultivate emotional neutrality. Average traders try to control outcomes. Peak performers control themselves. Average traders search for the perfect strategy. Peak performers perfect their consistency. This transformation does not happen overnight. It happens trade by trade, moment by moment. Each time you feel fear and still follow your rule, each time you feel greed and still respect your exit, each time you experience a loss and respond with analysis instead of anger, you are rewiring your relationship with uncertainty. And slowly, you become someone different. Someone who sees the market clearly. Someone who understands that randomness is not the enemy. It is the environment. You stop fighting the environment. You adapt to it. And in that adaptation, you find freedom. Freedom from needing to be right. Freedom from emotional swings. Freedom from self-doubt driven by short-term results. What remains is discipline, clarity, patience, and quiet confidence. You still experience emotions, but they do not control you. You feel the knot in your stomach when price approaches your stop, but you do not move it. You feel the temptation to close early when in profit, but you follow your plan. You feel the sting of a loss, but you do not take it personally. That is peak performance, not perfection, alignment. And the most powerful part is this. When you operate this way, the results begin to compound, not just financially, mentally. Your self-trust grows. Your confidence becomes grounded, not inflated. Your decisions become simpler. You begin to see that the market was never the real obstacle. It was your relationship with uncertainty. Once you make peace with that uncertainty, the game changes. You stop trying to conquer the market. You start cooperating with its nature. You think in probabilities. You manage risk deliberately. You review objectively. You act consistently. And in doing so, you evolve, not into a trader who never loses, but into a trader who is no longer shaken by losing, not into someone who predicts perfectly, but into someone who executes faithfully. And that version of you is steady, is resilient, is free. That is what peak performance really is. It is the quiet strength of someone who understands that every trade is just one moment in a long journey and who chooses again and again to act with discipline, clarity, and calm acceptance. When you become that person, consistency is no longer something you chase. It becomes who you are. And when consistency becomes who you are, something else begins to shift inside you. You stop looking at the market as a battlefield. You stop waking up feeling like you have to conquer something. There is no enemy. There is no opponent. There is only movement. There is only uncertainty expressing itself in price. And your role is no longer to predict it perfectly. Your role is to participate in it intelligently. That difference may sound subtle, but it changes the emotional tone of everything you do. Most average traders sit down at their charts with tension already in their bodies. There is pressure to make money today, pressure to recover from yesterday, pressure to prove that they belong in this game. But pressure distorts perception. When you feel pressure, you don't see clearly. You see what you want to see. You rush what should be waited for. You ignore what should be respected. Peak performance cannot exist in pressure. It exists in preparedness. Preparedness means you already know what you are willing to risk. You already know what qualifies as an opportunity. You already know what you will do if wrong. There is nothing to figure out in the heat of the moment, because the heat of the moment is where emotion hijacks logic. You've felt that moment before. The trade is open. It's moving fast. Your heart rate increases. Your thoughts speed up. Your plan begins to feel distant. In those seconds, you are not thinking about probability. You are thinking about pain or pleasure. And that is when average behavior shows up. Closing too soon, holding too long, doubling down, freezing. Peak performance is the ability to remain psychologically stable in that moment. Not because you are numb, but because you prepared your mind beforehand. You made peace with the risk before you entered. You accepted the worst case scenario before clicking. So when price moves, you are not negotiating with reality. You are observing it. There is a deep difference between negotiating and observing. Negotiating sounds like this. Maybe it will come back. It shouldn't be doing this. Just a little more room. Observing sounds like this. This is within my risk. My plan says exit here. This trade is just one in a series. One voice is emotional survival. The other is disciplined execution. And the more you choose disciplined execution, the more stable your internal world becomes. Stability is not glamorous. It doesn't feel exciting, but it is powerful, because when you are stable, you do not need constant validation. You do not need every trade to work. You do not need to win today. You understand that performance is measured across a large sample of actions, not isolated outcomes. This understanding protects your energy. And energy is one of the most overlooked elements of peak performance. Trading is mentally demanding. Every decision costs attention. Every emotional reaction drains reserves. If you are constantly riding emotional highs and lows, you exhaust yourself. And when you are exhausted, discipline weakens. You start cutting corners. You start seeking quick relief. You start abandoning structure. But when you operate from acceptance and process, your energy remains steady. You are not celebrating wildly after wins. You are not spiraling after losses. You are simply executing, reviewing, adjusting when necessary, then repeating. Over time, this repetition builds something stronger than excitement. It builds identity. You begin to see yourself as someone who follows rules, as someone who respects risk, as someone who does not chase. That identity becomes your anchor during drawdowns. Because drawdowns will come, even with a strong edge. Even with perfect discipline, there will be stretches where results do not reflect your effort. This is where average traders fall apart. They interpret temporary setbacks as permanent failure. They begin changing methods. They increase size out of frustration. They search for something new. But peak performers understand that drawdowns are statistical inevitabilities. They are not emotional emergencies. When you experience a drawdown, the most important question is not, how do I get this back quickly? It is, am I still executing my edge correctly? If the answer is yes, then the only task is patience. If the answer is no, then the task is correction. Notice how both responses are calm. There is no panic in either path. And panic is what destroys consistency. When you panic, you abandon probability thinking. You shift back into outcome thinking. You try to control what cannot be controlled. But when you stay aligned with your process, something powerful happens during drawdowns. Your confidence shifts from external to internal. You stop trusting results. You start trusting behavior. That trust in your own behavior is the foundation of long-term mastery, because markets will change. Conditions will evolve. Volatility will expand and contract. But disciplined behavior remains adaptable. You adjust your approach based on evidence, not emotion. You reduce exposure when conditions are unclear. You increase exposure when your edge is clear. But you do not swing wildly based on feelings. This emotional equilibrium is what allows you to sustain performance over years, not weeks. And sustainability is what separates those who survive from those who disappear. You've seen traders come and go. Some start with excitement. They experience early wins. Confidence surges. Risk increases. Then losses arrive. Emotion rises. Discipline fades. Accounts shrink. Hope turns into desperation. Desperation turns into quitting. The cycle repeats. This cycle is not caused by lack of intelligence. It is caused by lack of psychological alignment with uncertainty. Once you truly internalize that uncertainty is permanent, you stop trying to escape it. You build around it. You design your risks small enough that no single outcome can damage you. You design your rules clear enough that emotion has little room to interfere. You design your review process honest enough that growth is continuous. And slowly, trading becomes less dramatic, less chaotic, more methodical. This does not make it boring. It makes it sustainable. Peak performance feels quieter than most people expect. It is not adrenaline. It is clarity. It is the absence of internal conflict. It is clicking the button and feeling neutral. It is closing the platform and feeling at peace. It is knowing that you did your job regardless of outcome. That peace is earned through repetition, through choosing discipline when emotion tempts you otherwise, through choosing acceptance when control feels more comforting. And as you continue on this path, something deeper happens. Your relationship with yourself strengthens. You begin to respect yourself more, not because of profits, but because of integrity. You said you would follow your rules, and you did. You said you would accept risk, and you did. You said you would review honestly, and you did. That self-trust spills into other areas of your life. You become less reactive in conversations, more patient in challenges, more aware of your own emotional patterns. Trading becomes more than a financial activity. It becomes a mirror. It reveals how you handle uncertainty, how you handle discomfort, how you handle delayed gratification. And peak performance is not about eliminating human emotion. It is about not being ruled by it. You will still feel excitement. You will still feel disappointment. But those feelings will no longer dictate behavior. You will recognize them as temporary experiences, not commands. This recognition gives you freedom. Freedom to wait for your edge without forcing action. Freedom to sit through valid risk without flinching. Freedom to accept a losing day without questioning your entire ability. And when you reach that state, consistency becomes natural. You are no longer fighting yourself. You are no longer chasing perfection. You are simply executing probabilities with discipline. Average traders believe peak performance is something dramatic, a breakthrough moment, a secret technique. But in reality, it is built from ordinary actions repeated consistently. It is built from small, disciplined choices made when no one is watching. It is built from accepting that you cannot control outcomes, only behavior. And as you continue to operate this way, your focus shifts even further. You begin to value mental capital as much as financial capital. You protect your mind from overtrading. You protect your attention from distraction. You protect your emotional state from unnecessary stress. You understand that clarity is an asset, and you treat it as such. You do not sit in front of charts endlessly looking for action. You wait. You let opportunities come to you. You understand that forcing trades is often a sign of internal discomfort, and you choose patience instead. That patience compounds, not just financially, psychologically. Each disciplined decision strengthens the identity of someone who operates with calm control. And over time, you no longer feel average. Not because you win every trade, but because you handle every trade differently. You are no longer shaken by randomness. You are aligned with it. You are no longer seeking certainty. You are expressing probability. You are no longer chasing emotional highs. You are cultivating steady execution. This is what allows performance to last. Not for a month, not for a year, but for as long as you choose to remain disciplined. And the most powerful realization of all is this: the market did not change. You did. The charts still move unpredictably. Losses still occur. Wins still occur. But your internal world is different. Stable, clear, resilient. You sit down to trade without fear. You execute without hesitation. You exit without regret. You review without judgment. And you move forward without emotional baggage. That is not luck. That is not talent. That is alignment. Alignment with probability. Alignment with discipline. Alignment with the reality that uncertainty is not something to defeat, but something to respect. And when you respect it, when you build your behavior around it, when you accept it fully, peak performance stops being something you chase. It becomes the natural result of who you have become. And once peak performance becomes the natural result of who you have become, The game feels different in a way that is difficult to explain to someone who is still chasing certainty. There is less noise in your head, less urgency in your actions, less drama in your results. You no longer sit in front of a screen trying to force meaning out of every small movement. You are not hunting for reassurance. You are not begging the market to reward you for effort. You understand something deeper now. Effort does not control outcome. Discipline controls behavior. Probability controls outcome over time. That understanding removes a heavy burden from your shoulders. You stop trying to earn a winning trade through analysis alone. You stop believing that more screen time automatically equals better results. You begin to realize that peak performance is less about doing more and more about doing what matters consistently. You've felt what it's like to overtrade, that restless energy, that sense that you need to be in something. You scroll through movements looking for an excuse to participate. You convince yourself that almost qualifies as good enough. And when those trades don't work, frustration builds. But underneath that behavior is discomfort. Discomfort with waiting. Discomfort with stillness. Discomfort with uncertainty. Peak performance requires comfort with stillness. You must be able to sit in front of uncertainty without trying to control it. You must be able to let opportunities pass without feeling left behind. You must be able to say, this does not meet my rules, and close the platform without regret. That ability separates the disciplined from the desperate. Desperation shows up quietly. It disguises itself as ambition. It tells you that more trades mean more chances. It tells you that sitting out is weakness. But peak performers know that selective participation preserves both capital and clarity. Clarity is fragile. It can be clouded by fatigue. It can be distorted by emotion. It can be weakened by overexposure. So you protect it. You structure your sessions intentionally. You define when you trade and when you step away. You understand that mental freshness improves decision quality. You respect your cognitive limits instead of pretending they do not exist. Most average traders treat their minds as unlimited resources. They push through exhaustion. They ignore emotional strain. They try to power through losses with intensity. But intensity without clarity leads to mistakes. And mistakes driven by emotional fatigue compound quickly. When you begin to value mental energy as much as financial capital, your entire approach shifts. You trade fewer but higher quality opportunities. You stop reacting to every fluctuation. You become patient in a way that feels almost boring at first. But that patience becomes your edge. You also begin to understand the importance of emotional reset. After a strong winning day, you do not carry over overconfidence into the next session. After a losing day, you do not carry over frustration. You reset. You remind yourself that yesterday's results do not change today's probabilities. Each session is independent. Each trade is independent, and your job remains the same every time. Follow your edge, manage risk, execute with discipline. This independence between trades is powerful. It prevents emotional stacking. Emotional stacking happens when you allow previous outcomes to influence current decisions. After a loss, you hesitate on a valid setup. After a win, you risk more than usual. After a drawdown, you chase recovery. But when you treat each opportunity as statistically independent, you remove that distortion. You do not need to recover. You need to execute. You do not need to protect a winning streak. You need to follow your plan. You do not need to avoid another loss. You need to act on your edge. This mindset keeps you grounded. It prevents the emotional roller coaster that drains so many traders. And over time, this steadiness compounds into something extraordinary. You start seeing patterns not just on charts, but within yourself. You recognize early signs of emotional shift. You notice when impatience begins to rise. You notice when confidence becomes subtle arrogance. You notice when fear whispers hesitation. And because you notice, you can adjust. Self-awareness becomes your silent advantage. Not loud, not visible, but deeply effective. Peak performance is not about eliminating flaws. It is about recognizing them quickly and preventing them from controlling your behavior. You will still have moments of weakness. You will still feel tempted. But the difference now is that those moments are brief. They do not spiral. They do not define your session. They pass, and you return to structure. Structure is stability. Without structure, emotion leads. With structure, discipline leads. This is why written plans, defined risk, and consistent review matter so much. They create an external framework that supports internal control. When your internal state wavers, the framework holds you. You fall back on rules. You fall back on process. You fall back on probability thinking. And slowly, you begin to experience something deeper than confidence. You experience trust, not trust in the market. Trust in yourself. Trust that you will follow your rules even when uncomfortable. Trust that you will accept losses without self-destruction. Trust that you will not sabotage yourself in moments of emotion. This self-trust is what allows you to scale calmly when appropriate. It allows you to increase size gradually without emotional turbulence because your behavior is stable. You are not increasing size out of excitement. You are increasing size because data supports it. Because your edge has proven consistent over a large sample. Because your risk remains controlled. Growth becomes methodical, not emotional. And when setbacks come at larger size, you handle them the same way you handled smaller ones. You reduce exposure if necessary. You review, you continue. There is no panic. There is no identity crisis. There is only adjustment. This adaptability is the final layer of sustained peak performance. The market will evolve. Conditions will shift. What worked perfectly before may require refinement. But because you are process-oriented, not ego-driven, you can adapt without resistance. You do not cling to being right. You cling to being disciplined. If data shows your edge weakening, you refine it calmly. If volatility increases, you adjust risk. If clarity decreases, you reduce participation. Flexibility within structure. That balance keeps you aligned with reality. And as months turn into years, you begin to see something remarkable. The emotional intensity that once dominated your trading fades into the background. You no longer experience extreme highs or crushing lows. You experience rhythm. There are winning periods. There are losing periods. But through both, your internal state remains steady. This steadiness is freedom. Freedom from needing constant validation. Freedom from emotional dependency on outcomes. Freedom from the exhausting pursuit of certainty. And that freedom spills beyond trading. You approach challenges with calm reasoning. You respond to setbacks with analysis instead of panic. You wait patiently in situations that once triggered urgency. Trading becomes a training ground for mental mastery. And peak performance becomes less about money and more about who you are becoming. You become someone who respects uncertainty, someone who acts deliberately, someone who manages risk intelligently, someone who grows through review rather than reacts through emotion. That identity is powerful because once you see yourself that way, you naturally protect it. You protect your discipline. You protect your clarity. You protect your structure. You no longer want to sabotage yourself for a quick emotional fix. You value long-term stability more than short-term excitement. And that is when consistency truly locks in. Not because you forced it, but because it is aligned with who you are. You wake up, execute your plan, manage risk, review honestly, and step away without emotional residue, day after day, month after month, year after year. There is no dramatic breakthrough moment. There is no secret revelation that suddenly changes everything. There is gradual transformation through repeated disciplined action. And one day, you realize something quietly profound. You are no longer trying to be a peak performer. You are simply operating in alignment with probability, discipline, and self-awareness. The stress that once defined your trading has faded. The desperation that once drove your decisions is gone. The need to prove yourself has disappeared. What remains is calm execution, clear thinking, measured risk, and quiet confidence. You understand now that average traders chase excitement. Peak performers cultivate stability. Average traders seek certainty. Peak performers embrace probability. Average traders are controlled by emotion. Peak performers are aware of emotion but guided by discipline. And that distinction is what sustains performance over time. You do not need to be extraordinary. You do not need special talent. You do not need perfect prediction. You need alignment. Alignment between your beliefs and the true nature of the market. Alignment between your actions and your written rules. Alignment between your risk and your emotional tolerance. When those alignments exist, performance becomes consistent. And when consistency becomes your standard, growth becomes natural. You begin to trust the process fully. You begin to see losses as data. You begin to view wins as confirmation of discipline, not proof of superiority. You begin to feel neutral in moments that once felt overwhelming. And that neutrality is strength, because in neutrality, you see clearly. In clarity, you act correctly. In correct action repeated consistently, probabilities unfold in your favor. That is the quiet path. Not dramatic, not flashy, but durable. And when you look back at the version of yourself who once chased certainty, who feared losses, who reacted emotionally, you do not feel shame. You feel understanding, because that version of you simply had not yet aligned with uncertainty. Now you understand that peak performance is not a destination. It is a way of operating, a way of thinking, a way of responding to randomness with structure and discipline. And as long as you continue choosing that way, trade after trade, session after session, regardless of outcome, you will remain steady. You will remain consistent. You will remain aligned. And in that alignment, you will find not just financial growth, but personal evolution. Not just profit, but peace. Not just performance, but mastery of self within uncertainty. That is how average traders consistently achieve peak performance. Not by eliminating randomness, but by becoming the kind of person who can thrive within it,